Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everyone, Brian Hayes here with Zacks Investment Research, and welcome to our top stock picks of the week. This week I'm joined by my colleague Andrew Rocco. We've got two exciting picks for you, so let's jump right into the action. My top pick is a global technology provider of hardware, software, and related services for network operators. They've been a major beneficiary of the accelerating transformation driven by artificial intelligence, along with explosive demand for networking solutions. The company I'm referring to is Ciena Corporation, ticker symbol CIEN. In a year where artificial intelligence has reshaped the technology landscape, few companies have captured the momentum quite like Ciena. Its optical systems, software, and services power data transmission for telecom providers, cloud companies, and governments, with a primary focus on developing adaptive, AI-ready networks for massive bandwidth demands. Ciena specializes in high-speed connectivity, optical transport, routing, switching, and network automation, helping its clients manage data for 5G, broadband, and data centers. So Ciena shares have advanced more than 180% year to date, widely outpacing the major indexes off the April lows earlier this year. Only stocks that are in extremely powerful uptrends are able to make this type of price move. And these are the leaders and the types of stocks that we want to focus on. So there's been incredible demand for Ciena's high-speed optical networking solutions that are being driven by AI infrastructure buildouts and cloud expansion. The company's innovations in coherent optics and photonic solutions position it at the heart of a multi-year AI networking cycle where hyperscalers and service providers invest heavily to support data-intensive applications. This is a stock that is not only highly ranked by our Zacks rank system, but it's also outperforming. And as we'll see, the company's firing on all cylinders. That's a bit about Ciena's background in services. Let's shift gears a bit and take a look at some fundamentals for this company. Ciena is part of the Zacks Communications Components Industry Group, which is currently ranked in the top 14% out of approximately 250 industries. And because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months, just as it has throughout the year. We can see that the industry's total return this year exceeds 100%. Historical research studies suggest that approximately half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. By focusing on leading stocks within the top 50% of Zacks ranked industries, we can dramatically improve our stock picking success. Also note the characteristics for this group below. We can see that while valuation measures are mixed, companies in this industry are projected to experience above average earnings growth. So investors are rightfully willing to pay a bit of a premium for the enhanced growth. And moving to our snapshot page here, we can see that Ciena stock is a Zacks rank number 1 strong buy. And what stands out is Ciena's consistent ability to deliver positive earnings surprises. Over the last 13 quarters, the company has only missed the bottom line mark twice. Ciena delivered a trailing 4-quarter average earnings surprise of nearly 23%, reflecting strong execution in converting AI-driven demand into real results. This track record aligns perfectly with the power of the Zacks rank system, which prioritizes stocks showing upward earnings estimate revisions. Ciena's transformation has been remarkable. The company reported fiscal fourth quarter results just a few weeks ago that exceeded expectations, with adjusted earnings per share of 91 cents, beating the Zacks consensus estimate by 18%. Revenue of 1.35 billion during the quarter topped forecasts by nearly 5% and grew 20% from the year ago period. Management highlighted record orders, a $5 billion backlog, and market share gains in optical networking, particularly among cloud providers that now represent a larger mix of sales. The Maryland based company has been the beneficiary of improving earnings estimate revisions as of late. Looking into the current quarter, analysts have raised their fiscal Q1 2026 estimates by a whopping 39.47% in just the past 60 days. The Zacks consensus estimate now stands at $1.06 per share, and let's see how that compares to the year ago figure. So that $1.06 EPS would reflect better than 65% growth relative to the same period in the prior year. Revenues in the current quarter are projected to climb nearly 30% to 1.39 billion. These are exactly the types of trends we want to look for when narrowing down our list of potential stocks. And the stock price has reflected the fundamental growth. As we mentioned, Ciena stock is up more than 180% this year. Notice the steady trend of higher highs off the April lows, leading to sustained outperformance and rising moving averages. Between the strong fundamentals and appealing technicals, it's clear that this stock is a leader in the current market environment. So Ciena Corp, ticker symbol CIEN, is my top pick of the week. Shares have really come on strong as the broader market returns to all-time highs. I see more upside ahead for this stock. Next up, Andrew will share with you his other top pick of the week.
Thank you so much, Brian, and welcome everyone. My name's Andrew Rocco. I'm a stock strategist here at Zacks Investment Research. I also do manage the Tech Innovators portfolio, and today I'll be discussing my top stock pick for December 29th. So hope everyone's having a good holiday season so far. And let's jump right into things here. My top stock pick is going to be Alphabet, formerly known as Google, ticker symbol GOOGL. And this stock earns a Zacks rank number 3 hold. And of course, Alphabet is one of the most innovative companies in the modern technological age. Over the past few years, the company has evolved from primarily a search engine provider to a cloud computing, ad-based video, music streaming, autonomous vehicle, healthcare, and a bunch of other stuff provider. So Google does have a diverse business, but Google's best known for its monopoly in search, which we're going to discuss, and how AI impacts that search business. And over the years, the company has witnessed an increase in search queries, resulting from ongoing growth in user adoption and usage, primarily on mobile. So one of the largest fears coming into 2025 for Google investors was the fear of AI cannibalization of Google's search business, and that's the crown jewel of Google. So Alphabet's dominant search market share and expanding cloud footprint are key growth drivers for the company. Initially, Google's AI efforts got off to a shaky start. If you guys remember, Google, if you use the Bard AI model, which was Alphabet's initial AI model, if you search for George Washington, he'd come up as an African American. Just there was a lot of inaccurate information, but it appeared that ChatGPT and some of these other models were going to run away with the AI race. But as you guys have probably learned several iterations later, Google's Gemini 2.5, which is its new model, is one of the leading AI models out there currently. It delivers some of the most rapid responses in the industry, and it's really viewed as an industry standard. And then the investor fears about cannibalization, I would say that those have been determined to be unfounded so far. at least up until this point. So Google's unique hybrid AI search model has driven popularity among younger users, and Gemini models are rapidly being embedded across search, YouTube, Android, and Workspace. So it's enhancing the user experience and it's driving revenue even further for that ad business, that coveted ad business. So a lot of investors were concerned that Gemini would eat into the search business. We're simply seeing no evidence of that in the fundamentals, which should allow Google investors to not only breathe a sigh of relief, but also be excited about the future. And speaking of excitement for the future, Google's groundbreaking TPU. Let's talk about that. So, Google has constructed its own chips to power AI bots. Google's tensor processing units, best known as TPUs, are custom designed application specific integrated circuits. So, those are ASICs, and they're built to dramatically accelerate machine learning tasks, especially large scale training and inference for models like Google's Gemini, powering search, photos, and more. So Google's not only going to be able to use this on their in-house AI, they're going to be able to sell this to outside users. And in my view, it's the real first competition we're seeing to NVIDIA. NVIDIA does have some advantages, TPUs have some advantages, but the beauty of the TPU is it's specifically made for these large language models, and the TPU is tailored to machine learning applications, allowing the chip to be more tolerant of reduced computational precision, which means it requires fewer transistors per operation. And that's a quote from the company. So it's an order of magnitude better optimized performance per watt for machine learning. So that's some groundbreaking technology that was unexpected. That could be a catalyst into the future. And another multi-year bullish trend for Alphabet and an ongoing catalyst has been the growing of the cloud computing market. In Q3 2025, Google Cloud revenues increased 33.5% year over year to some 15 billion. So Google's growing investments in infrastructure, security, data management, analytics, and AI, and that is showing up in their revenue. Alphabet is also benefiting from its partnership with NVIDIA in the cloud. Of course, Google Cloud was the first cloud provider to offer NVIDIA's B200 and GB200 Blackwell GPUs, which are highly sought after. So Google does have the TPU, but they're also benefiting from their collaboration with NVIDIA for their Google Cloud. So that's definitely a positive. Now let's jump over to the revenue growth. So Google's really benefiting from two particular revenue drivers. Number one is AI enhanced ads. So AI is improving and targeting the ad business. We've seen this with Meta, which is a stock I've covered in the past. It's not only making users stay on these platforms longer, which is a positive. They're clicking on ads and taking advantage of ads more often. So that's definitely a positive. And then on the short form video, AI has been a driver. Basically, what AI is doing, it's enhancing these algorithms in these social media giants or internet giants like Meta and Alphabet. And we're seeing it show up in the top line growth. For next year, they're expecting, and by they I mean Zacks consensus estimates, they're expecting double-digit top-line growth of 14.67%. So healthy growth for a company of Alphabet's size. And then another future growth driver is going to be Waymo, which is the driverless robotaxi service that Google has under its wing. And you can see here, driverless taxi usage in California has grown eightfold in just 1 year. I think Waymo's doing around 500,000 rides per week, on driverless rides per week. they're looking to get that number up to 1 million. So I do still believe that Tesla is going to win this race. Tesla will have the larger share just because of their scalability. They're not using the expensive LiDAR that Waymo is using. That said, I don't believe that the robo-taxi market is a one winner take all. I think Waymo will be able to capture a significant part of that market, whether it be 25 or 33% of the market, and that will definitely contribute to growth because the robo-taxi market will be quite big, not only in the US, but worldwide. So that's something in the future that's potentially a driver maybe into 27, 28 of revenue. But it's just something to track as an Alphabet investor. And then, of course, one of Warren Buffett's last investments as the head of Berkshire Hathaway before he retired is Google. And he made a significant surprise investment, which is a $4.3 billion stake in Alphabet. And it marks a major bet because in the past, outside of Apple, which he had a lot of success on, Buffett did miss a lot of the tech boom of the late 90s, for example. So the fact that he's investing in a major tech company like Alphabet, it just underscores the market dominance in search. It underscores the potential of AI. And it speaks volumes considering Buffett normally has this hesitation to invest in tech stocks. And unsurprisingly, Google has one of the lowest price to earning ratios of the Mag 7 stocks, which makes sense considering Buffett is a value oriented investor. It's trading around 30 times EPS, which makes it very reasonable, also considering that double-digit growth I mentioned earlier. Additionally, the company does have about $100 billion in cash and only $20 billion in debt. So this strong cash hoard provides the flexibility required to pursue any growth strategy, whether through acquisitions or otherwise. So let's say they want to take more of that robo-taxi business. Maybe they'll just decide to buy like an Uber or something along those lines, but they certainly have the cash to make a large-scale acquisition if need be, whether it be an AI, robo-taxi, or any of the other many divisions. And then finally, I'd like to discuss the technical picture here. What you're looking at is a weekly chart of Alphabet. And what I like about this chart is you just see it trends very, very nicely, and it's not too volatile. So even when the market has gotten pretty volatile, Google has traded kind of like a dream. You can't ask for more as an investor. It's just hugging the 10-week moving average, which is an intermediate moving average that a lot of institutional investors like to buy off of. You see the first pull into that 10-week moving average. Shares got bought up almost immediately. We've trended well above it again, and now we're setting up another bull flag. So no reason to overthink the technical side of things. It's mimicking the fundamentals. We just want to understand that the trend is our friend. You could use that 10-week moving average as a guide. So that wraps up my top stock pick, which again is Alphabet, GOOGL. They're going to be a leader in AI. The valuation is reasonable. The technicals are there. They've got a ton of catalysts moving forward. The fears about their search business being upended by AI have been disproven. So for that reason, we are bullish. Alphabet, GOOGL. Thank you guys all so much for watching. Before I step off here, please do visit Zacks.com/promo. We've got a good promotion going on right now, and I hope everyone has a wonderful new year. Thanks so much for tuning in.